Welcome on board Mr. Veer S. Advani, the Vice Chairman and MD at Blue Star, joining in on the show right now. Mr. Advani, hi, great to have you on ET Now today. Peter, just going through your quarterly performance, and it's been a decent quarter for you, the second quarter overall. Tell me, what's the visibility for the third quarter now on the back of the October heat phenomena, which is currently at play?
Thanks so much. Thank you for having me. Maybe I'll just do a wrap of last quarter and then tell you about what's happening in the market. So we had a good quarter, like you said. We grew revenue about 20% to 2,276 crores. And PBT grew by 38% to 131 crores. And that growth was largely led by segment one. You saw both revenue growing at 33% and EBIT growing by 80 plus percent. In segment two, we had a slightly soft quarter. You saw only about a 5% growth in revenue and a slight degrowth in profitability. I just want to clarify on that. Segment two is actually two businesses of ours. It is both the room air conditioner business as well as the commercial refrigeration business. So I'm happy to tell you that the room air conditioner business continued to do well. We grew at over 25% in revenue as well as profitability. We have had some challenges in the commercial refrigeration business, due to which you can see segment two a little muted. Those issues in commercial refrigeration are short term. They're just this quarter and perhaps the next, more related to standards changing, and because of that, delays on our side to redesign products and take them to market. But you asking about demand. Demand across all our businesses looks good. October was a strong month for our room air conditioner business, which is important. It's a festival season, and we're very happy with both the market demand growing as well as our own performance in October and in Q3.
There was a time when summer meant more AC sales, winter meant no sales, but things are changing now. Is that true, that there is nothing called a lean period and a peak period? The sales by and large would be very universal. Of course, summer bump up would be there, but by and large, in the second half of this year also, which is like a cold winter time in North India, you don't expect sales to drop?
Yeah, so Nikunj, something has definitely changed in the market. Look, let me put it this way. Even in very advanced markets like the US, this is a summer-led product, right? So it's not as though the summer bump is going to disappear. I think what's happening is that what used to be a big Q1 and a big Q4 and a very small Q2, Q3, I think that has changed a little bit. This is the second year in a row where the second quarter has been a good quarter in terms of volume growth and demand. I think that so one is there is a spillover from the summer into Q2. And, in Q3, there's a lot of pre-buying that a lot of the channel does in anticipation of the summer coming. So I think what's happening is that Q2 and Q3 are becoming important quarters for the industry as well. So, but I would still say that Q4 will always be the biggest quarter for the foreseeable future.
The big macro spiel for the air conditioning industry is look at penetration levels, where China is, where we are, and we will head that way. If those numbers are to be believed, then it appears that the air conditioning industry should be in for a 12 to 15% growth for 3, 4, 5 years. Is that a right assumption?
Yeah, definitely. So I think that we're indicating slightly better actually. This year, of course, is a very strong year for the market. So I think the market will grow about 25% in the current year. Our forecast is that the market should continue to grow at more than 20% for the next 4 to 5 years. That's a sense we get looking at customer demand across the length and breadth of the country. You're aware about what percentage of demand is now in tier 3, tier 4 markets. So I think this broad-based demand growth is extremely exciting. So I think 20% for the market should be a reasonable and realistic outlook.
Supply chain disruption that you may be, sort of anticipating now with the Trump victory?
So supply chain is a very complicated subject. I think more than Trump, a lot of our input comes from the East, whether it's from China or from Southeast Asia and Japan, Korea. So I think that a lot of challenges on the supply chain side, unrelated with the outcome in the US. All of us Indian manufacturers are working on supply chain mitigation plans. We are looking at options for key components like compressors and electronics, etc. So all work in progress. I think over the next 3 to 6 months, there'll be much more clarity on what percentage of those components are going to be manufactured in India through either suppliers of ours or backward integration on our part. As far as the Trump outcome, the US outcome is concerned, I think that we're a little cautious because, as you know, we are ramping up our US export business. There is a lot of noise about possible import duties being raised in the US. Of course, nothing has happened yet. We're yet to see the outcome. One thing we do know is that whatever actions the US takes on imports is going to be much more severe on China as compared to non-China imports. And given that we're in that second bucket, I think that whatever the Trump administration does, it should be all right for Indian exporters.
Uh, you've raised capital a couple of quarters ago. Even though your cash flows are strong, it will have impact on your return ratios in the short term. Because if you raise capital, your return on capital obviously will go down. How much time before that capital is utilized and you will go back to your historical return ratios?
So, Nikunj, I'm very happy to tell you that as we know, we're a ROC focused company. That's been where we've come from and where we're headed to. So if I look at ROC movement in the last 4 quarters, I know it's a very short amount of time, but since we've raised the money and we've been deploying the capital, we haven't seen much of a dip in our ROCs because our profitability has improved, as you've seen. So, of course, there will be a lag. I think that we will continue to focus on delivering an ROC of north of 30% in spite of the capital investments we're making, because if the demand holds up the way it is and the way we're seeing it, the return we will get on this investment will be a lot shorter time frame than what we had envisaged when we had raised the money. So, manufacturing capex that we're deploying is returning, positive EBIT as well as a positive ROC and accretive ROC within 12 to 15 months. Of course, R&D capex and R&D investment will be a longer return time. I think it's about 3 or 4 years before we really see the returns of all those investments we're making. So net, we will make sure we maintain ROC above 30% in spite of this big capital investment cycle that we're in. Just to highlight to you that, we started that cycle about 2 years ago. Current year, we're intending to deploy about 500 crores of capital. And next year, again, it'll be in that vicinity. So we are adequately using the QIP money that we raised as well as internal generation. So we're quite comfortable with ROC projections as of now.
Projections do you have for cash flow projections rather do you have for next 2-3 years?
So I think that we need to start generating cash by the end of this year. We've been in investment mode for 2 years. So we expect to generate a little bit of cash this year, and then we will start to generate far more healthier cash flow, operating cash flow from next year. So I think the 1,000 crores that we raised will see us through comfortably for the next couple of years, and then internal generations start to take over. I think you look at the balance sheet for the first half, you'll see that net worth has improved to close to 2,500 crores. So it's the balance sheet is getting strengthened and is continuing to improve. So I think on the balance sheet side, we're quite comfortable. I think what we have to watch is how the demand pans out for B2B products of ours. Room air conditioners, I think we're clear what the outlook is. On the B2B side, things are looking good as of now, but there is an overall slowdown in India that you'll be tracking much better than me. So a lot of our end customers, we have to watch their demand outlook and to see whether we're able to sustain this kind of growth in our segment one.
Mr. Advani, so great having you on the show today. Thank you for taking the time out.
Thank you. Thank you.
If you like this video, then like, share and subscribe to ET Now.